Good evening, I'm Liyana Hassanel. Welcome to Bizworld. Foreign selling of Malaysian equities on Bursa Malaysia accelerated last week to 511.51 million ringgit from 436.91 million ringgit the prior week. MIDF research noted that foreign investors were net sellers every trading day last week, except last Tuesday, whereby it recorded a net buying of 9.38 million ringgit. Local institutions continued to be net buyers again at 288.68 million ringgit after being net sellers for 4 consecutive weeks since the week ended on May 13th. Local retailers also continued to be net buyers at a rate of 222.85 million ringgit. Engineering solutions provider SFP Tech Holdings made its debut on the ACE market of Bursa Malaysia at 60 cent, notching a premium of 30 cent from its issue price of 30 cent. Its Chief Executive Officer, Chang Chi-Jia, said the counter saw 90 million shares changing hands at the opening bell.
We are humbled by this opening, double the opening price. We will strive for sure in the future for better shareholders' return, to increase more value.
The company expects to raise 62.23 million ringgit from the IPO, which will be utilized for its capital expenditure. This includes the construction of manufacturing plant in Penang Science Park, as well as for purchase of machineries. Moving forward, SFP Tech plans to expand its engineering supporting services and automotive equipment solutions in automotive and healthcare industry. Petronas Chemicals Group Berhad (PCG) targets to produce Maleic Anhydride in Kuantan, Malaysia by first half of 2025. PCG is currently performing a detailed assessment on the plant, which is expected to be completed in the first quarter of 2023. Its Chief Executive Officer, Muhammad Yusof, said the company's current integrated facility will ensure competitive and secure feedstock supply to the plant. Additionally, proximity of the plant and its identified target markets within the Asia-Pacific and Indian subcontinents will enable competitive pricing to its customers. Recently, PCG signed an agreement with its joint venture JV company, BASF Petronas Chemicals (BPC), to acquire the 113 kilotons per annum KTPA Maleic Anhydride plant located in Gebeng, Kuantan. CJSCIMB Research has cut the year-end KLCI target to 1,568 points from 1,647 points. This is to account for additional earnings risk arising from U.S. recession fears, as well as the 15th general election, GE15, which could dampen market sentiment. The research firm also expects the market to remain volatile, given the uncertainties over inflationary pressure, Ukraine-Russia war, and global monetary tightening. Its KLCI earnings projection of 0.6% for this year and 11% next year may appear optimistic and could be susceptible to downside risk if the U.S. economy and global economic growth slow down significantly. The firm also continues to like the banks as a beneficiary of the rising interest rate cycle. Oil prices wobbled as investors refocused on tight supplies, though sentiment was still fragile after a 6% slump amid concerns about slowing global economic growth and fuel demand. Brent crude futures gained to more than $113 per barrel after rising as much as 1% earlier. Front-month prices tumbled 7.3% last week, its first weekly fall in 5. The fundamental picture remains one of the tightness amid the ongoing slowdown in Russian output. The impact has been partly mitigated by the release of strategic petroleum reserves, led by the U.S., and a ramp-up of production from OPEC+, although that is thinning the world's buffer against further supply disruption. That's all the time we have for Bizworld. I'm Liyana Hassanel. Thank you for investing your time with us.